Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Friday, October 14th, 2022. Been actually looking forward to this one. I poured through the charts last night, just looking at just about everything, but focus mainly on the stock market. I'll tell you what, I'm going to kick off a very, very brief update on the other things because I keep talking about that. I know the stock market's not everything, especially in the way I like to trade diversified. Just very quick update on crude. If you remember crude on give you the setup last week, earlier this week. It's CL 60-minute chart, so crude futures, hourly candles. You had that trend line break right here giving us a sell signal, and these were the targets laid out. I cannot recall if I've added or modified any of these since I started it, but not sure. But either way, you had a little minor downtrend line there. It's set up, and like I said, it's going to zigzag its way down. It always does, assuming that longer-term target I laid out is hit, which I still suspect it will be. This is the I believe, the first target there, 89.66, and almost to the button. So after this little small divergent low, you had multiple reactions there, and now it's moving lower. Remember, it already hit this target and bounced from there. Expected, already hit this one and bounced. That's why multiple targets are listed. Each one is an area of reactions likely. This one you reversed a hair shy, then you hit the second one, you had your bounce up to here, then you had third target bounce up to here. And so by that logic, these have been checked off already, so to speak. So that should take us down to the swing zone. And then ultimately, if it's going to get there, take us down to that potential longer term target. On the yearly chart, let's see here. Do I have it on this one? Maybe 1 minute. Yearly, daily. Yeah, that's it. About 73.71, and also what I laid out for you on USO. I covered that the other day. Let me do an update on lumber as well. That was also a trade idea I laid out recently. Everything had some volatility yesterday with that crazy hot print on the CPI and the reversal in the market. But I'm trying to get to lumber. Bear with me. Here we go. All right, so lumber also, broke out of that little bull flag, and then that little traded inline sold down with the market, but still well above our entry on lumber. I think the entry I pointed out here, that one being away from my desk, goes a little behind getting out to there. So this is where I first highlighted on a break above that level. So here's where we're at so far. We're up, and boom, we just checked that 500-ish target. Remember, these are actual resistance levels. Always sell below the level. Oh yeah, this is what I wanted to update. Right after I did that video 2 days ago, this was where I showed you that measured target where I favored lumber going in the near term right here. I had the line at about 520, what is that, 529 right there. Studied the chart a little further, and this is where my preferred target is right now. Modified it, that's 533 again, best 593, I'm sorry. Nope. 523. What's going on here? Okay, I typoed there, and I'm reading off this. There it is, 523. Okay, and so just a hair below that is what we're looking at. Okay, so there's your update on lumber, and there's an uptrend line which will continue. I think there's a chance for a pretty decent bottom to provide objective entries if we do pull back before getting there. You have both a really good price support right here. That was a pretty big level, about 461, and so if we pull back here, we're also going to hit that trend line around the same time, and so it could play out that way, especially the fact that we're at that level, that target right now, and we haven't had much of a reaction yet. So there's your update on lumber. Finally, let me just do gold. Gold just really needs to. The story remains, if you look at this daily chart, this buy zone that I've had here for years now, since getting out of those longs and as trend and swing and investment trades and going short on the metals and miners. Pullbacks to this buy zone have worked, and then recently, as I highlighted here, we broke below it. So we tried to recover it, popped, came back down. I still think we'll take it out. We still have a pretty constructive chart. Nice divergences right here. They're not the be-all, end-all. I'm going to talk about that a little bit in the video here as we get into the stock market, but that's it. So, really, ideally, we need to see it take back 190. What is that level? 158 right there. Take it back with conviction. So let's keep it super simple. Gold's a buy above this level, And I'm giving it room. It's part of my portfolio hedged. I have treasuries, some long treasuries and gold. Even though they're suck and win lately, I feel comfortable with those against index shorts as far as longer term positioning. And they're also not really going down much anymore. And I'll give you that update on treasuries. They're kind of holding their own. Well, TLT's down today, slightly down 0.5%, but really set up again for an explosive move. But just like gold, I will not add to these. I will not have my what I consider a full position until this level goes. I've talked about it for weeks, if not months now. There's our primary uptrend line in TYX, the yield on the 30-year Treasury bond, which is just the inverse of TLT. So you have a comparable downtrend line on TLT. Once this breaks, I think it'll be a very fast rush for the not a rush for the exits, a reversal, because TLT, remember, goes opposite the rates, and you'll see a quick short covering rally in bonds, and I do believe that will be coming sooner than later. You just need that catalyst. And so, like I said, the rates are creeping up. 30-year mortgage just hit a, what was it, 20-something year high, almost getting close to 7%. But here's TNX, the 10-year yield too. You want to see this one go. This one is just right there. It is a beautiful setup, big divergences. That's just the daily chart. You can go out to the weekly, see the same thing here. So looking at a breakdown there, an abatement in yields, which will be a rally in bonds, and even yesterday I continue to layer in like 401k type money, things like that. You manage my wife's 401k. There's not many options there. You can go stocks, and within stocks, international or domestic, small, mid, and large, they've got that. Bonds and cash. That's it. You don't even have a commodities fund, so it's a lot harder to trade anything of value. I've been in cash most of the year, and rightfully so, because stocks and bonds, the charts were ugly on both, and both have fallen. So vastly outperformed the market, making much. But so anyway, I just wanted to say that's I feel the risk reward is more attractive right now in stocks and bonds. Let's do this. Let's get this one out like this. Just a short update on these because I'm 7 minutes into it, and then I can roll into the equity markets. But before I do, and I'll do that in another video. But before I do that, let me just show you where we're at. We're no change from yesterday. I pointed out yesterday, this is to me a big level here, about 269 on QQQ. That's a 60-minute chart. Well, you can see it on the 60 and why. This is the previous low. Turn off all the lines, and I'm gonna do a little bit of a deep dive, and I'm going to show you something a little bit different, something I haven't showed you yet, and I'll do that in the next video. But that's it. So there's our, that was at the time the bear market low. Came, tested it for a double bottom. We broke below, and yesterday's rally is certainly impressive. Nobody can, say a 6% recovery from low to high, to recoup a big loss in intraday. But it was technically induced, and I'll go over those levels in the next video. But like I said, for now, or I said in that post yesterday, I'm sorry, you can look at it glass half empty or glass half full, and how you want to do that, that's up to you. Right now, my longer term, just about all my trend indicators remain bearish, so I'm skeptical of the move yesterday. And at the end of the day, say what you want about it. All it is at this point in time is nothing more than a breakdown of those previous lows, 1, 2, right? Double, and then a back test. And technical analysis or trading 101 says in a downtrend, you either short breaks of support or back test to resistance. Now there are a lot of other crosswinds right now, and I'm going to cover that in the next video. So let me truncate this one here, cut it off, get this one out to you as a 9-minute video, a quick update on those other things, and then I'll cover the stock markets in detail in the next one. But as of now, like I said, that's what that is, nothing more than a back test. And the next video, I really like what I'm going to show you, whether it plays out that way or not, and it's a conditional scenario. So for the markets, well, if they do this, then it's probably going to do that, and if they do this, then it's probably going to do that. I'll explain a little bit more in that video, and I'll work on it right now. So let me wrap this one up. This should upload quickly and get out to you, and by the time you're done with this one, I should be finished with the other one.